Hi, welcome to JohnSwift Homes Real Estate, affiliated with Coldwell Banker Residential Brokerage. My name is John Swift. This is a video in a series of Swift tip videos that I do on real estate related matters. All things real estate, from fixing up your home, maintaining your home, investing, buying, selling, savings, especially savings for a home or savings for any major purchase. These are some of the tips that I produce on these videos. Anyway, today's topic, someone asked me recently how the new tax law affect real estate. And these are just a few of the elements of that. The tax law is pretty large, so I suggest you consult your tax advisor or your attorney or your financial advisor. I am not any of those things to you. I just produce these videos and based on my personal experience and based on my reading of these things. And I've done extensive reading, but consult your professional advisor on these matters. The first one is SALT, what we call state and local taxes. In the previous law, you could have deducted state and local property taxes and either state local income taxes or sales taxes. This law doesn't change any of that. All it does is cap what you can deduct at $10,000. Okay, so if you itemized previously, you could have deducted all those things that I mentioned. Now it's capped at $10,000. On mortgage interest deduction, you can deduct interest on debt up to $750,000. Previously, it was $1 million, and you could do this on your first home and a second home. Again, it's on the debt. It's not interest you could deduct up to $750,000. It's the debt that you have and the interest on that. That's up to $750,000 debt. You can deduct the interest. Next is the tax brackets. We hear that a lot of folks will get a tax decrease. Well, usually this is probably where it will come in the sense that the tax law, the 7 brackets remain. And only included in each of the brackets, the amount you could earn expanded. So they increase in each of the brackets. So that's where, if you were in the 28% tax bracket, you might fall down to the 25% tax bracket, given that now you could earn more money in that tax bracket. So that's kind of where, when we talk about you might get a rate reduction, that's pretty much where it will come from. Next is, as it relates to real estate, is capital gains. Capital gains taxes is profits you earned on assets you held for over a year. And real estate is one of these assets. So in this one, there's no change to the previous law. Capital gains, the law previously remains now. There was no change to the capital gains law. So this is a benefit for real estate. Next is like-kind exchange. Like-kind exchange, as we call it, is a 1031 exchange, which is, there's no change in the rules as it relates to this. It's asset acquired when you exchange one for the other, basically. So you sell one asset and you buy something same or similar as it relates to this. So we call like-kind exchange, which there's no change to the law as it relates to that. So again, check with your financial advisor, your tax attorney, or your accountant on these matters. I am just giving you tips here based on my experience and my reading of these things, and as questions come up in my business and practice and folks ask me to do videos on certain things. Anyway, again, JohnSwift Homes. If you know of anybody buying or selling, wants some help, contact me and I will be glad to help them out. So I am coming to you today from the Disney World, Walt Disney World in Orlando, Florida, from the Contemporary Hotel looking over to Magic Kingdom. Anyway, again, talk to you until my next video. Bye.